Okay, so this is my new thing I'm trying. Basically, there's these ETFs that are mirrors of each other. There's a ETFs are cool to trade because they're made up of several companies that so even if one goes bad or if there's a news item on company, it's not really affected. So news doesn't affect ETFs. Second good thing about ETFs, there's lots of volume going on, so that's good. Third good thing about a lot of ETFs is there's lots of up and down swings throughout the day. So it's not just like a typical stock where you might see a whole bunch of swings up and down for the first hour, hour and a half, and then it just goes flatlined. So certain ETFs might have lots of opportunity to trade throughout the day. The bad thing about ETFs is it's especially double leveraged or triple leveraged ETFs. Um, that means that they can have higher swings. But the problem with double or triple ETFs is that because of that leverage they got, you're not able to do shorts. You can't do a short. So what this strategy is to just use an ETF to do longs, and then the thing with reverse ETFs is that when one of them is going down, so in other words the price is dropping, so you can't do a long, and also you can't do a short because it's an ETF, the reverse image is going up. And so one of the favorite stocks me and my buddy look at is Lab D and Lab U. And the reason you can look at the D is it means down and U is up. And so basically what they are is mirrors of each other. So if you look on the left hand side, you see this stock is going down and this one is going up. Then so what you can do if you're trading these stocks, when to start out with, this one's going up, so you can make a trade from here to here. This dashed blue line means a trade, so you'd enter here, you'd exit there, and then it starts going down. But when this one's going down, then you can jump over to this side, and this one will be going up, so you make that trade. Now this one reaches a peak and it starts going down, so then you're over here somewhere where it's going up. That makes sense? Now these two stocks are not exactly the same, but they are reversed, but they're pretty close. And what that means is that since they're pretty close, you can use one stock might be better at figuring out what's going on before the other one is. So like for instance, on this peak up here, notice that you have a blue triangle and a black triangle. So that's a pretty solid, I say medium to big volume. That means it's pretty good that it's a peak and it's going to start going downhill significantly. That would correspond to this valley over here. So this peak over right there corresponds to the valley right there. And here you don't have a blue, you have two blacks. So it's not quite as clear that this is a valley if you just look at the colors. Of course, if you look at afterwards, it goes up, but you're trying to get in close to the bottom as you can. So, for example, you see this one is a big green with blue volume and the red, and you can see this definitely goes down. So on this time right here, you know it's down low, and that's at 650. But you see this is a huge drop, and so by the time you get in there, there's not much change from here to here. You're looking to get in a big change. Of course, you can't short this anyway, but the point is that you know that this is a valley. It's like you got a big volume here, green, red candles, and then the second candle is red with another volume. You know it's going down. And if you look at the time of this, it's at 650. So notice down here, 650. I got the line down here at 650. So now we go over to this stock over here and put our cursor at 650 there, right? And you'll notice that it's 650 is this green bar here, and the earliest to get in is 651. Well, you can get in right down here, and that's actually near the bottom. So right here is near the bottom, and that's a good place to enter the trade right there. Where on this one over here at 651, it's like right there. It's kind of like you've already gone down over halfway down to the part over here. So so at 651 you can enter right there, and then you can ride it on up, and you say, well, that's not big of a gain. Well, if you look at the price, it's like you would get in at something like 39.10, and you could exit out somewhere. You have a sell limit there, which it would hit at 39.53. So that would be at 40 cents. So that little gain from here to here is a 1% gain, nothing to sneeze at.